Now, despite its attraction for investors, Kenya's housing market is still a mystery in many ways. The country of over 40 million people has barely over 20,000 mortgage accounts, which is less than 3% of GDP. At the same time, $1 out of every 5 lent to the private sector went into either real estate or the building and construction sector. With a housing deficit estimated to be over 200,000 units a year, why are housing and mortgages unaffordable to most Kenyans? That's a question CCTV's Nyang posed to Johnson Denge, the real estate services manager at Cytonn Investments.
Real estate still is still the best asset class. You see returns in terms of about 25 to 30%. You see that in terms of contribution to GDP is quite high, almost 14%. So that baffled us unto a point and find out, while real estate is really thriving, why are mortgages not growing? So where is this source of money that is being taken into real estate? And that's why we went to use a metric that we use, which is an affordability index. Yeah. It's basically trying to gauge the median income of the society versus a median price of property in various segments, various markets, and trying to gauge how much will the median income be used to comfortably service a mortgage and comfortably service a rental.
I mean, one of the interesting elements of the study came right towards the end, where you basically said, if you're making the median income in Kenya, a mortgage is practically beyond your reach, because at 50,000 shillings, you wouldn't even qualify for a mortgage. Which then leads to the question, because if you put real estate debt and building construction debts together, I mean, they're about second or third largest after personal loans in terms of the lending categories. So where's all that money coming from? Is it all external funding? Is it people's savings, even though we have a dismal savings rate in this country? Is it illicit cash flow? What's happening?
I'll not go to perhaps illicit, because I do not want to get to dive into that. But the issue would be, we've carried out a study around the satellite towns, and we realized that from our survey, though it was qualitative, most of the people attributed their funding into real estate through SACCO loans and through personal savings. And we were actually trying to gauge what is the need within those markets, and trying to see when do they construct, how do they acquire their land, so that we can actually develop a product to service them. And another thing that I think could be the reason why real estate funding is, as you say, is quite high, is diaspora remittances. So those three, I think, are the key sources of funding into this market.